Good morning, everyone. Today is Saturday. Finally. Saturday, February 7th. And today is the RODY update. And of course, a little wheel now. We're wheeling a little bit, a little zebra action, and then, this, that, and the other thing. But this week has been, rough. Pretty rough, not going to lie. Did not expect a week like this. I know the market has been, I hate saying choppy. People always say choppy. To me, that means nothing. But the market's been blah. That's my educated term. Blah, blah. But this week was, yeah, we just got punched in the face, right? Unless you had a lot of hedging going on, a lot of downside protection. So let's we're going to review the damage that my account had, the losses that I took, and talk about the future of my thinking after a week like this. What should I do to avoid this in the future? But before that, let's take a look at Bitcoin. We had what is it? What do we call that, a fake out gain yesterday? Bitcoin went up to 70s. It's like, okay, yeah, we're back. No, we're not. We're not back. We're at 67. We're at 68. So, yeah, it's gonna be like this probably for quite some time. But the drop, man. Let's go to the 1 week, man. Oof, like that was like, ooh. What do we got? We got some news here. Let's click it. Yeah, it's still Binance stuff. But yeah, look at the 1 month. I mean, what can you say? What can you say? If you're in here, by the way, good morning to everyone that is here live on YouTube and X. But if you are here, are you still buying Bitcoin? Or have you given up? Let me know. Biggest Woody was here before I was here. So shout out to him. Good morning. It's hot as hell in this room already. So let me turn the heat off. Good morning, Alan. Good morning, Double D. Double D will be a guest with some others on Monday morning, 6 a.m. We're going to talk about zero DTEs. And this week, the reason I'm pushing for it sooner than later is I want to learn it sooner than later based on a week like this. Having a trade that ends in the same day, it's over right now. You can sleep. Whatever happens in the pre-market, the after hours, it is what it is. So I think we're going to dive into some zero DTEs because obviously he does them. So we're going to, pick his brain. So thank you, DD, for agreeing to join Monday. Go check out his channel, by the way. Good morning, Nikki. Good morning, Brother AB. Brother AB was able to join. We did a quick Discord live yesterday with Ambassador of Quan. Real quick update on that. We may start to open, to be honest, the Discord voice chat's always been open to whomever wants to go on there and talk. But I know someone's got to start it, right? So, I've been talking to Ambassador of Quan a lot about things, and he may be doing some interviews on my the voice channel on the Discord, because might as well utilize it, right? We have a Discord with all these people, and we never use the actual voice functionality. So we could schedule interviews. We could just go in there. And I was thinking maybe on Fridays, we do the market close, just, whoever can join from 3 to 4, chit chat, see how things are going. How'd your week go? This, that, and the other thing. So just a heads up, if you're in the Discord, look out for that. Hey, Steele, what's going on? Steele, you've been back lately. It's good to see you back. Double D buying $50 Bitcoin today. Very nice. All right. Biggest Woody, I have a buy set for 100. Every 5K, it goes down. Wow. Okay. Well, this week, you got that, right? A lot of 5K drops. So, for this month, mainly. Let's see. Brother AB, daily buying has been paused. Nikki, fun Monday. Yes, very fun. Should be fun. For sure. Let's see. Alan says, I almost pulled the trigger on zero DTE yesterday. I went out. I said I was going to do it either Thursday or Friday, but it's so hard. I need to plan it in the pre-market. That's the only way. So I'm actually, this weekend, I'm going to try to plan something. I'll have to get, I don't know, because it's just too hard with work and everything. Morning, Kevin. And Jack's Beach Nats 5148. Good morning. Okay, we got our good mornings out of the way. Let's move on. Let's get to the show here. So first off, like I said, I brought back the wheel. Remember this? Remember this old school thing? Remember? It's fun, man. I had fun with it. But I had to do it for my own sanity. But yeah, so I'm wheeling. I'm wheeling again. Remember this? The visual wheel. Sell put. If it gets a sign, sell call. If not, sell put again. And then so far, and then that's it. The wheel goes round and round. All right. I have many videos on it in case you're not sure about it. But long story short, I'm doing the wheel only on TSLL at the moment because I've noticed like Tesla, you know, when everything sells off, sometimes Tesla is strong. And it's always volatile and it's always in a solid range. I know it's kind of at the highs, it feels like at the moment. So trading a double leverage fund is super risky, clearly. But it's very, very cheap. So even if I get caught up and get destroyed, I'm just doing one contract at a time. I'm not rushing anything. I'm just going to have fun with it and not go crazy because that's the problem. I start going crazy on things and that's how I lose money. All right. So anyway, for this week, obviously, you know, these two transactions were done this week. So in case you were wondering, yes, the prior week I got assigned. All right. Assigned. What was the strike on that? $18. So I own 100 shares of TSLL at $18. Okay. So I decided to sell a call on that. At the time, TSLL was at 1672. And I said, you know what? You know, I used to always just do at the money, collect the premium. I said, you know what? I'm not doing that. I'm going to collect $1 per share in capital gains in case I get assigned. That way I'm making money on both sides. You know, trying something a little new, safer deltas. Again, stay in the 0.2 range, maybe 2 at the same time. So I did that. It was 13% out of the money at the time. Now it's 22% out of the money. In fact, I could have probably closed it the other day, but I left it alone because, well, I didn't really even get to look what the price was. It crossed my mind to close it early because I could have taken most of the profit. But whatever, man, it doesn't matter. You know, like I said, that's the thing with options, man. You should be able to be active. So if you're someone who works a busy full-time job during the market hours, it's hard. And that's why a lot of people do just buy these ETFs and they let the ETFs do their thing, right? There's only so much you could do on a freaking lunch break, on a pee break, on a this or that. But you get what I'm saying. Anyway, so what else did I do? I sold a call. And how much did I make on that call? I made what? $23. Okay, great. And then I sold a put because it dipped. If you see, when I sold the call, it was 1672. It dipped down to 1542. So I sold a put at $14. By the way, both have an expiration date of the following week, February 13th, because I didn't see anything in the current week that was worth it. So between the two, I made about $61. Oh, yes. And by the way, I did have a put that was expiring yesterday. $15 put. TSLL closed at $15.50. And since it closed above my strike price, and guess what? It did not get assigned, so I did not get more shares. So that expired worthless. So we can gray that out because that's in the past. And we're left with these two transactions that are open. But again, how much did I make for the week on the wheel? I made $61, which used capital of $4,572 approximately, right? Which yielded me about 69% on an annualized basis. So again, in this disaster market, yeah, why not make another $61, right? What if Tesla goes to zero? Oh, okay, well then I'm screwed. All right, I get it. But yeah, so that's my wheel action. Again, that's all I'm doing. I'm just using TSLL at the moment. I'm not going crazy. That's my only stock because it's cheap. and it's been good to me. It's always been good to me. I left the wheel to strategize on the RODY, and now that I'm comfortable on the RODY, that's why, you know, I kind of jumped into the wheel. Anyway, 61 bucks. So I made 140 the week prior, right? And then so on and so forth. So anyway, like I said, this is not, this video is not really about the wheel, but I wanted to just update you on that. All right, so now let's get into the fun of RODY. So first off, again, I want to pull up a chart or two just to understand. And I'm going to say this right now. I'm going to punch myself in the face if I don't listen to myself. For the RODY, me personally, I can only do indexes. I can't pick a stock worth a damn. I just need to understand that. It's just not, you know, it's not working out. It's not working my way. So, and the indexes have been nothing but good to me. They've gone up and down, but they just work. It just works so far, at least, beautifully. So anyway, the point of that, saying that is, I pulled up the 6-month chart on the Qs. Again, this is the, you know, the NASDAQ, essentially, right? We're looking at what, the 200 all right, again, let's look up here. The 200, it says SMA, but I did convert them to EMA per MCheese. So the EMA 200 is at below 580, right? So again, that's one of the things people say, as if it's above, it has to be above the 200 EMA. Okay, so on the 6-month chart, it's, the price is at 609. 609 is above the 580. So what about the 200 EMA on the 1-year chart? It's still above the 200 EMA. Okay, so again, that's just one, and it's also one of the rules, not to go into charting because I am not the chart guy, but that's one of the rules, that the current price should be above the 200 well, I have SMA, EMA, whatever, EMA, SMA. I don't even know what the hell the difference is, but whatever. They look pretty much freaking the same to me. But again, that's just what I wanted to cover for today. All right, the Qs are above the 200 SMA. All right, that's it. That's all I'm going to say. Now we can move on. All right, now let's talk about this week. Yeah, we got destroyed. I don't know what else to say. Maybe like open. Let's see open. We can pull the open up. The 1 week on open. How we doing? Right, 5 days. Well, actually, no. It's been a combination. It's been over a week actually. So let's pull up the month. That's a fair. All right, down 22.78%. Probably can't even see this. Don't worry, guys. I got your back. I'll zoom in for you. All right, so we got, yeah, down 22.78. I mean, that's not ideal. That's tough to work with. Okay, so what did we do? So I decided, I have 10 contracts, FYI, on open. I've been trading the 10 contracts together. Basically, when open was trading around my strike price or above, of course. Now it's not. Now we saw the current price. It's at $4.88. Like, what am I supposed to do with that? So I said, you know what? I'm just going to split up the contracts and I'm going to sell calls, longer dated calls, to make something, right? To make something, because I'm not sure if you guys saw, because, you know, to give this a fighting chance, in order to get back at least what I paid, forget about like how much I could lose on the downside. To get back my original investment, I need to make $14.07 a week. So I took one contract and I made $24. Again, I'm selling at a strike at 7. I could probably go lower at this point since it drops so damn low. But as many people know, this thing moves. So what I'm going to do is I'm going to, on open at least, this is just open, I'm going to sell one contract per week, and I'm going to make at least double of this for sure. And that way, at least I'm covering my expense, and then I'm starting to work on covering the downside just in case open does not exceed $7 by this date. Again, this expires the end of the year, but you'll be surprised. Time freaking flies. So we'll see how that goes. If we look at my, the holdings, I mean, the synthetic is worth negative. Like the synthetic is god awful. So if I closed it today, I would lose an additional $315. Or if I wait and it went south, the maximum loss you could lose is $2,000. Again, I added this part last week so we can see, all right, do I believe in it? If I don't believe in this, I'm better off taking the hit of 315 versus taking the hit of 2,000 when all said and done, if that makes sense. But open, I feel like it's still worth it. If I was to redo it, I think I told you guys, too many contracts. It's not for me. I would have not done it, but again, it is a fun one to trade though. I'm not gonna lie, I have fun trading this, but right now it's not fun at this price. It's not very fun at all. So hopefully we get a recovery next week, and we have a fighting chance again. But for now, I'm just gonna be making, $20 here, $20 there. Let's see if I made $24. I'm risking, right, 3,830. That's still a 32% yield. I sold one stinking contract, right? And I still yielded 32% based on how much money I have invested. That's still not bad. See what I mean with a high IV, like what you can do? But yeah, at the same time, open go to zero, and then we're all screwed. Or just, well, us open people. As they say, the open army. I wonder how the open army actually feels. That's a thing going on X. Let me take a pause to say good morning to anyone else that joined. Who we got here? We got LA Appliance Guy hitting 12,000 subscribers. His channel is like growing so freaking fast. So congrats to him. He's blowing up. He's gonna be famous one day, and we're gonna be like, I know him. All right. Steele says, I still do wheel on TSLL. Hell yeah, Steele. It's fun, isn't it? All right, let's see what else we got going on here. Yup, I'm only in indexes. Nikki knows. Nikki knows what's up. All right, LA's mainly in indexes. It just helps. Like, I mean, I know it's not fun, right? It's not fun, but it's, unless you're really good at stock picking, it's really a week like this or the last 2 weeks, it's tough, man. It could be tough. Single ticker, single failure point. Yep. Diversify inputs like income. Yeah, man. I mean, one could just bring you down. So I might break another chip off in some Bitcoin dip today. There we go. Dippity doo-dah. Happy Bitcoin dippity doo-dah. Oh yeah, definitely famous. Let's get going. All right, so we talked about open. Let's talk about SoFi. I have two SoFi positions. I made the original, and then I got greedy and I wanted another one. So let's talk about the original. So the original, I have 5 contracts with a cost basis, if I go to the holdings real quick, of $28. All right. SoFi is at $20. Again, this is the problem of doing so many damn individual tickers. Like, the stock market overall was going down. Yes, everything was going down for the most part, except Walmart. Walmart was like holding up strong. But when you get some of these individual tickers, especially the high IV ones, man, they take a beating. All right. So anyway, what did I do with SoFi? I kind of did the same thing I did with open. So look at the expiration dates I had to use. I sold a call. It was on SoFi, $28 strike. It was 31 days till expiration. And then I did another one 35 days out. So whatever. I did it at my cost basis of $28. I collected how much? What does that calculate the minimum? $39. Okay. So long story short, I made $39 for this overall position. I'm risking 4,304. Still a 47% yield. It's not bad. It's better than nothing, right? What do you want me to do? Like, are we just going to sit here and wait till the recovery? That's almost never happening. Or are we going to trade, like men? All right. So that's what I'm doing. I'm trading, but I'm still trading at my cost basis. All right. So it's either I trade short term under my cost basis, or I do further dated expiration at my cost base. And the beauty of having multiple contracts, which I always say is a pain in the ass, but the beauty of having multiple contracts is, you can basically choose one to do this, one to do that. You could do one this week, one that week, and screw things up, right? And have fun with it. But anyway, so the value of my SoFi position, again, not good either. Everything's in the negative. I don't know what to tell you. Because again, based on the cost basis, it's just we're down. We're down heavy. So why is my portfolio down? Well, basically, because see this sold put, this thing will bring you down. Luckily, we bought a put, right? So we have protection on the downside. So again, like the SoFi overall, this overall position, you know, the put cost $3,970 to close, but thankfully, the protection put, you know, the buy put is offsetting at least $2,202 of that, if that makes sense. But also, as SoFi goes down, the value of the buy call is going down, decreasing in value. So I'm also going down from that as well, if that makes sense. We should, you know, one day I'll break down like an individual position, because again, you know, ideally, like the buy, call, sell, put, same strike, same expiration date. We always say delta one, that moves 1-to-1 with the underlying. But when you do the buy put, that you know, that moves a little differently, right? On the downside, it moves differently. On the upside, it moves differently. But again, we're not going to break that down today, but just something to point out. SoFi, the other position I did create, again, I guess I started too early. Again, the timing, I swear, on anything I try to do lately on the individual tickers, it's just not, it's not quite working. But anyway, let's see what we got going on here. We added a 25 and a 23. So basically my cost basis is 24. I didn't make a trade. I didn't make a trade on this position because I don't know. It's only 2 contracts. I should have at least traded one. I didn't do it. Yeah, whatever. We'll work on that next week and we'll go from there. But yeah, which just sucks that I didn't do that. ELF did pretty good, considerably. Let's take a look at ELF. The 5 days, yeah, they went down 3.41. For the month, they're up 6.83. So ELF is hanging in there, man. But you can see my average is $75. Only one contract, unfortunately. So I had a covered call that was expiring, $84 strike. It looks like it closed around 82. So what I did is I still moved it up in strike price. I moved it up $2 to $86. Which, you know, it's only 4.7% out. But I feel like there's going to be a little upside. So I want a little wiggle room for that. The delta on that was above 0.2, though. It was at 0.33, but I still collected $140 for that. So again, ELF has been really good to me. So I'm happy with the trade this week. I made 140 for risking 2,028. That's a 358% annualized yield. So, you know, again, fantastic. And my synthetic, if I sold it today, I would make an additional $1,053. So in fact, you know, the unrealized gain overall in the synthetic is 525. So like I said, this position is doing well. However, I do net it against, when all said and done, I am netting it with my old ELF position, if that makes sense. All right, let's move on. Okay, here's the awful part. All right, Hood. I don't know, man. Hood moves with Bitcoin. It seems only on the downside, right? So if I look like over the last month, Robinhood has been down 32%. I mean, year to date 26. 1 year, 1 year is actually good. So the 1 month, the 1 week is down 16. The 1 month is down 32, and I don't know. It's just brutal, man. You could see my cost basis, 145. I got in 140, and then I tried to average down to 120 like a jackass. But I got out of it. I sold out of it. I couldn't, because even if you look at my cost basis, this is what I was focusing on. I'm looking at like 135, right? And I'm looking at these. Like, is Robinhood going to reach 145 or 140 even or even 120 by May 15th? I mean, I don't know. So it's either I just wait, take the max loss of 8,500, or take the loss of whatever the hell I did. But in the end, my synthetic, between expenses and how much I lost, 11,701. If I net that with the covered call income, that's 2,756. And I could fast forward to the close tab to just tell you guys here, this is the loss. I took a hit on Robinhood for 8,752. Yeah, that's also my first loss on RODY, but it's a big one. So big mistake for me, trying to invest in something just because I like the app, just because this, that, and the other thing. So again, and it told me, all right, it smacked me in the face. It said, okay, what the hell are you doing? And this is what happened. So it was either I wait 3 months and try to make some covered call income, sell calls at what price, I don't know. But it was easier for me, and I'm actually happier to get this damn thing out of the portfolio, to be honest. So it's out, it's gone. I can now move on. So I'm gonna hide these now, because to be honest, I'm sick of looking at them. I love Robinhood for the long term, so I may consider buying a leap on them. At what point, I do not know, because it is not cheap. So, but right now, they are not something I want to wheel. They're not something I want to do the RODY on anymore. All right, Palantir hasn't been much better, but it's one I'm not giving up on just yet. But you can see I got in 190 and 180, and right now it's at 135. So my cost basis of 185 versus the 135, not so pretty. And I'm not looking to add to this position at the moment, because now this synthetic is 3 months till expiration. So I'm going to deal with what I have, and I'm going to sell covered calls. And at least like on this one, I'm at house money, right? So at least for the expense. So now it's all about, all right, where will Palantir settle when all said and done by expiration? So I had 2 covered calls expiring this week with a 185 strike. Obviously, Palantir closed $50. $50 under the strike. Holy crap. So both of them expired worthless. So I'll gray that out. And then we go here. And for this week, I decided to do at least one contract. I sold a covered call with a 185 strike. So still at my synthetic cost basis. But I chose a 2-week expiration. So February 20th. How much did it pay me? $11. I know. What a joke. But hey, I got something out of it. What did that yield me? 5%. I know. I'm trying to, get something out of this. But right now, it's also not looking too pretty for, Palantir at the moment. You could see if I cut ties with the synthetic position today, I would lose 5,100, or I could wait and risk, to lose 7,500. So again, that's the decision. But again, this is the risk of investing in individual tickers, right? So lesson learned on Hood, lesson probably going to be learned on Palantir. All right, now, let's get back to our cheery mood here. All right, now we're getting to the indexes. All right, because our indexes, they're at least nice to us, right? Even when they're down, they're not down like these other suckers, because again, let's look at IWM. Let's look at the 1 week and the 1 month for IWM. The 1 week, look at this. It was green. It was green this week. IWM was freaking green this week. The 1 month, it's green, So again, I don't know what else to say. Like, this is it. IWM's the master. I mean, we'll look at the Qs too. I think the Qs were down this week though. Let's look at the 5-day. Yeah, the Qs were down, but not a lot, almost 2%. That's it. You go to the 1 month, the Qs are down still, again, but only 1.35%. We can manage that. We can deal with that. So again, just something a little more manageable based on the strategy. That's all I'm getting at. So anyway, IWM, as you know, the synthetic position is now at 260. So we can sell calls typically at 260 or above. So what I do this week, I had a covered call that expired at 263. It closed at 265. So what we did was a rolling order. I rolled it from 263 to 265, which at the time was 0.12% out of the money. Now it's essentially at the money, but whatever. It paid me $160. All right. So if IWM goes up above 265 by next Friday, that's fine. I'll just roll it up $1 or whatever, you know. I'll roll it up gradually if I can, and then we'll you know, go from there. So like I said, there's the rolling order. It made 160, so we can gray out this old transaction, and let's see how much we made versus how much we risked. So again, I made 160. The total risk on this position is 4,269, and that's an annualized yield of 194%. If I look at the synthetic holding, if I sold the synthetic and I closed it out today, I would make $2,242, which is good, right? However, as a synthetic net, you know, if I net the two, it's an unrealized loss of $2,650. However, again, that's irrelevant because we do have covered call money. But this is, you know, overall the IWM position has been really, really good. Even though we rolled it up probably too soon because the market did go down a little bit. But again, it worked out, right? Because right now we're still priced above the 265 is above the 260 synthetic that we moved it to. So IWM, I cannot complain. Now the Qs, we have an average cost basis of 615. I had a covered call this week. What was it at? 622. So obviously the Qs did drop a bit. We closed at 609. So what did I do? I rolled it down. I rolled it down to 615. I said, you know what? All right. It's at 609. Let's see what you got. So again, 2% out of the money. Again, I'm comfortable with a 2% cushion, you know, on the index. How much is it really going to move in a week? But again, if it breaks through, if it blows through the 615, I'll roll my call price up and I'll collect the premium the following week. But I got $290 for rolling it, you know, this week to 615, which again, fantastic money. You know, considering how much do I need to make on a weekly basis? $46 to offset the expense of the synthetic. So that's easy. And obviously that's done. That's been done every week. But anyway, 290, that gave me a 175% annualized yield. As far as the holdings, if I sold out the synthetic today, I would make $4,700, which is not, you know, it's not priced above the synthetic strike. But again, we made so much in covered call income, right? How much is the call income? If you look here, where is it? We made 4,000, right? So again, so add 4,000 to that, you bet $8,700, 87 net of that. Yeah, we'd be in a profit. All right, so that's kind of how those numbers work out. All right, moving on to Netflix. Again, we're doing a zebra transaction here, if that makes sense, which is you buy two long dated calls, two leaps, and you sell a call with the same expiration, only one though. And then what we do is, the reason we call it a zicket is because we're selling weeklies on the other leap. So that thing, let's see, we had a what? We had a $87 strike. That thing expired. What? Netflix was at 82, so I lowered the strike $1 and I made $21. Yeah, it's not, I know. So I'm not doing that great on this position, to be honest. So it hasn't been too fantastic. You could see the weekly goal is a little higher than using the RODY because the expense is a little higher because we're not selling puts. We're not getting credit for selling the puts. But the beauty of the Zicket is there's no put to bring you down, right? There's no additional downside. The risk is what you paid, right? That's the risk. So you can lose that, but you can't lose anything additional like we can on the RODY. All right, so let's see. We made $21. How much did that yield us? Did we cover that? Let's see, $21, risking 3,033. That's a 36% annualized yield. All right. Now, if we go to the holdings, We see what it's worth currently, 1,865, which right now it's obviously below what we paid for it, but that's fine. We got time on this one. This thing expires January 15th, 27. So hopefully, again, Netflix was down a lot. So my thought was, again, like a jackass, stock picking over here, is Netflix is going to recover. And it should. I feel like it should. But this is the beauty of the zebra, the Zicket, max loss, right? There's no additional here. There's no, it's not bringing us down. All right, anyway, let's move on. If I lost anyone here, let me know. But if you guys have questions, reach out. All right, we got 2 hoppers here. These are the leaps on open, and they're disgusting at the moment. So we're going to fast forward away from them, and we're going to go to my hedge. My hedge is the VIX. So basically, what am I doing? I bought one contract on the VIX. At the time, the price was 1484 of the VIX, which is very low based on historical data. So I bought a leap at 14. I paid $800. Again, I didn't have no rhyme or reason when I did this. I thought I was just going to sell it at a profit. If there was a huge sell-off, like this week, the VIX jumped up, but oddly enough, it's weird how the VIX works because it jumps up in price. You would think your option would be worth much more than it is, but it's not. So, and we'll get to I'll show you that now, actually. So look, like, where's the VIX? So here's the VIX price. This is like week by week. What I do is I track the price of the VIX, went from 15 to 16 to 17 to 17. But here's the options price, right? Again, it's like the option price, even at 15, which is above 14, it was worth less than what I paid for it. At 16, it's only worth 805. At 17, it's worth 770. But again, because the IV jumped down. And then even at 1776, if I sold it today, I would only get $7.77 per share. I paid $8 per share. And it was at $14 then. So again, this thing, I'm still trying to understand it. But the bottom line is I'm not waiting around. I'm selling calls on a weekly basis. So I sold the 25. The thing with these, though, is they expire Wednesday morning. So I have to remember on Tuesday to roll it. So I had a 25 that expired on the Tuesday. I closed it early. I think I closed it on the 2nd. I collected 90% profit, and I made $36. So great. I did a buy to close, and what I did is I waited, and then it jumped up again, right? I don't know what the price was when I closed it, but it was below 17. But when it jumped to 17, I sold another call on the VIX at 25. Again, the delta on that was about 0.12. But it paid me $28. And yeah, we'll see how it goes. Again, the strike of 25. Where's the VIX been trading? Actually, I can't even pull up a VIX chart on here, but I don't think it's hit that number, right? It's hit like 22, maybe 23. I don't know. But if it did hit that number, I didn't get assigned, right? But it doesn't matter. If it hits that number and I do get assigned, that's fine, because 25 minus $14 is $9, right? No, I'm sorry, $11. Oh my God, I'm half asleep. But the point is, it's above $8. My cost basis is $8 per share. So so if I make $11 per share, obviously that's a $300 profit on top of the covered call income I already made. So this is my hedge play, but at the same time, it's an income play, if that makes sense. I'm not gonna lie, I'm like, I should have bought more, but I didn't know what the hell I was doing. But again, it's still too early. I can't get ahead of myself, but it's been working out. So on a weekly basis, if I generate $23 a week, that'll offset the expense when all said and done of the 800. So I made what? 36 last week, 28 this week. So I'm ahead of schedule on that. So hopefully in the end, it'll be a net profit. But like I said, if we get assigned early, I'm selling for strikes where if I get assigned, I'm going to have a capital gain. So as long as I could do that and I could still be making this type of premium, it's a no-brainer to me. I mean, I don't know what you guys think about doing this, but hey, it's been working, man. So $28 based on risking 800, 182% yield on an annualized basis. Again, I don't know, my VIX, that was the only position that I felt good about last week, the VIX. So anyway, let's move on. So for the week, I've generated 680. Wait, that's not right. Is it? Yeah, no, I made 713. Who didn't I didn't add the VIX, did I? All right, so let me add the VIX. There you go, 713. All right, so oh yeah, and we're also in a new month. So what we're doing now is which I haven't even done the end of month update, but it was god awful and it has gotten worse since. But I'm lowering my goal yield to 40%, from 50% to 40. So based on that balance, my new goal for the month is 2,043, which now, you know, it cuts it close with the bills and everything. But regardless, that's a goal, a weekly goal of $510. So did I make it this week? Yes, barely, 713. How much am I risking? 52,104, which, yeah, so we did that. Was Hood? Yeah, there's Hood. I got to delete. Yeah, I got to delete Hood now. Okay. Yeah, so now after that realized loss, by the way, you know, basically I did some tax loss harvesting in a way, right? So it's $8,000. All right, I already saved myself some taxes. I took a loss this early in the year. But anyway, all things aside, I'm now only risking $39,000 only, right? And I made 713. That's a return of 1.8%. Annualized is 94%. So it's fine. Good. Goody. Again, this is the better way to look at it. This is the RODY breakdown. How you doing, right? This is the covered calls. Who's out of the money? Who's in the money? Everyone's out of the money, of course, because the market's been crap, except IWM. The Qs are rather close. And, of course, ELF is doing well. Netflix is okay. But, again, open SoFi and Palantir, just they're going to be the struggle. You know, SoFi, I think, will be fine. Open and Palantir, I don't know. We'll have to keep an eye on that. So let me go to some comments before we see how much money the mess is. All right, so let's see. Slow and steady. That's what we are, right? We are slow. We need to be slow. We need to slow our roll. Okay. Never for me. Nikki's one of the best subscribers. She's always loyal to her peeps. People, you can see them with that smile thinking I'm gambling. My other half loves what I'm doing. I've never had a savings until now. It's all because of investing in different strategies. Hey, that's good that he loves what you're doing. Good morning, SB. SB, you're going to be there Monday or what? Hopefully SB will be there amongst others. I don't even know if SB does 0 DTEs though, but you don't have to. You can join and not. You could just be like a question guy like me. 5-0 is freaking tired. Yeah, man, I hear that. Long week, man. Long week. 5-0. How'd your portfolio do? Brutal last couple weeks. Roddy and Zebra are bull plays and one market. Yeah, for sure. You know, I've been talking about Hood and how much I hate it. So in reality, looking back on things, should I have taken the hit sooner? Obviously. Or, you know, on the flip side, people say, why you should have waited till earnings. They have earnings this week. But it's like, I don't even care. Like mentally, I just wanted that. I'm done. I'm so mentally done with it. I don't even care if they have good earnings. Like sometimes it does get to that, which, do I want, like it was such a relief getting it out of the damn portfolio. I can't even tell you. So it was well worth, it was a very expensive hit, but well worth it. The VIX represents FUD index when fear rises. Yep, they call it the fear index, right? The fear index. Good morning, Black Mamba, or BMT, as Alan says, right? Let's see. SCHD is killing it lately. Yeah, I looked at the chart, actually. SCHD held up pretty good. I know, we bash SCHD because of the lower yield, but, look at that, man. Up 5%. Solid. 1 month, up 12. Wow, that's actually, I didn't know they were up that much in the 1 month. That's pretty good. Damn. See, the 1 year is only up 12. So they made it, on the 1 year chart, all that 12 that they made that 1 month. But again, they made it this month. This month was brutal. Dividend, what's their yield? 3%. Payout ratio, 54%. Not bad. Again, this dividend growth is a joke, though. They got to do better than that. That's why we're like, to me, if I'm going to be in a fund that's paying a low yield, I'd rather be in a fund that focuses on dividend growth, right? Like HCow, like I knew that one. They invest in companies who have like high cash positions, but yeah, we'll talk about that another day. Because seeing a market like this, it does make you kind of want to. Maybe we should build up, some boring positions that will hold up better. I'm not saying necessarily SHD, but like funds that are strong, that hold up strong like that in a market like that. But yeah, one of my safer ones. I'm surprised you're in that 5-0. Should I call you sissy girl? I'm kidding. Only 12. Yeah, only 12%. Cornerstone. Yeah, I'm not a fan of that one. Let's see. Think about the charts. How long you looking at? Compare that to your, yeah, exactly. So see the difference for me, everyone's different scenario, is this account that I use, it's for income. It's to pay the bills. It's to help us survive. I will survive. So it's not, if this was like in a Roth IRA and it was just growth, I wouldn't be doing what I'm doing. I'm trying to make income, keep it running, the idea is I make enough income to pay the monthly bills and then enough on top of that to reinvest. So, right now I'm finding the best way to do that without, with little risk. And obviously what I have been doing is not the best way to do that. So, I'm learning as we go. But again, I will say it over and over and over. This strategy, this RODY strategy, at least for me, the way I do it, I love the indexes. They've been nothing but freaking amazing to me. But anyway, so if I look, we're just going to go for the overall here. We're down massively on open. We're down. SoFi, we're down. ELF, we're barely down. Palantir, we're down huge. IWM and the Qs, we're up. Thankfully, we're up. How much are we up? Well, not enough to offset the other disasters, but we're up 3,100. The rest of it, we're down. How much? We're down 8,100. So if I cut ties with everything else except the indexes, I would take another $8,100 hit. But I'm not doing that because I actually think a lot of these will recover. I'm not sure about Palantir by May, but that's the only one that's a little iffy. But Netflix open that, they have further expiration dates, and I believe in the SoFi as well. So, but again, once they're ELF will be fine. But once they're out, they're probably done. The ones in gray are definitely done. ELF is not in gray because I don't know. I've had so much fun trading ELF. It's been a wild ride, but it's been fun. All right, earnings dates. Palantir had earnings, so we can just add another 3 months just so we know. Even though we're not, well, we may be in it on May 2nd. I don't know. ELF had good earnings, but again, it was kind of shattered with the week of the sell-off. So that was kind of rough. That's why I think there's more running to go. Open, they have earnings this month. And again, yes, Hood has earnings next week, but Hood is not on here anymore. So bye-bye, Hood. Ex-dividend date, I got to keep it out an eye for IWM and Qs. So I don't want to be in the money, at the money, close to the money on this date on either index on my covered call. So I need to make sure that, of that on March 18th and March 23rd. I'm happy the dates are close, so it will be a little easier for me. All right. Let's see. I'm going to go through some comments and we'll go from there. Yeah, you like that? You like that? All right. Expensive lesson on hoodie. Oh, yeah. Oh, yeah. You buy a new leap only after a big flush. See, good for you, man. So you bought a leap January 28th. January 2028. What was your delta on that? Did you go in the money? Did you do like a 0.9 delta? Or did you just go at the money? I don't know. I'm still learning leaps, but people say to do 0.9 delta to maybe closely move with the underlying. All right, I don't know. Let me know if you're still here. Okay, good. Exactly 0.9 delta. Yeah, I was looking at those. I really wanted to, but I've just been so defeated by Hood. It was really hard for me to spend any more money on them. I'm a believer in the app. I mean, they're going places, but again, mentally, I know you got to be strong mentally, but that spending another, what, 4,000, 5,000, whatever the price was, it wasn't easy, man. In the money, which was, so are you going to sell covered, poor man cover calls on that leap? Black Mamba. Kobe. Do you know who White Mamba is? NBA trivia. Got my alert and jumped in. Nice. I don't do alerts. Maybe I should, right? All right, so we're pretty much done here. We're done here. Sectors, yeah, whatever. Who cares? All right, so here's a closing picture. But yeah, we'll see. What else we got going on? Oh, you did have 110 for next week, so that's good. All right. I guess we'll pull up a video and call it a day, or should we look at earnings for next week? Next week, Monday is. By the way, I think the stock market has a holiday on February 16th. I think it's President's Day. Pretty sure the market's closed. When I was selling my calls on the IWMs and the Qs, I noticed a gap there. 50 got it. Scalabrini. That's right. Good job. Brian Scalabrini is White Mamba. But I will sell only when the premium worth the risk. Otherwise, I just pass. Yeah, man, you're in a good spot right now. Hopefully, although Bitcoin's down, I'm sure you saw. So Hood could be dropping on the Monday, which is good for your cover call. And again, you have till January 28th for that leap to do something. So yeah, I'm a little jealous of that leap. But yeah, like I said, I'll jump in when I'm mentally ready to be in Hood again. So we got freaking earnings next week. No one worth a damn on the Monday. Coca-Cola on Tuesday. Okay, a bunch of scrubs. CVS, they're the worst. All right, Wednesday, Cisco. Oh, McDonald's. That was like that when I was in dividend growth stocks. Man, they were my favorite. My kids still have it, but Shopify. All right, Thursday. Who else we got? Budweiser. Okay, Friday. Yeah, boring ass week. How about the next week? Medtronic. Used to love that one too. Walmart. There we go. Walmart earnings play. But yeah, man, like I said, Walmart, let's take a look at it. It's been doing freaking really good. 5 days. Look at that. Look at that, man. What the hell? What kind of chart is this? Oh, this is WMTI. What happened? Obviously, that's probably ex-dividend. All right, so we go to the 5. Look at that, man. This week they're up 10%. Imagine if you're just in Walmart, you'd be like, "What red market? What happened this week?" Nothing happened this week, right? Like, whew. Yes, it is. But that's life, right? That's life. Life is expensive. The point of this portfolio is, it's additional a system, essentially replacing an income, right? Because we're down in income since the wife is home with the kids. So we have the work, we have the expenses of the kids, we have the expenses of this, that, and the other thing, and then we have the options income helping pay the bills, right? But finding a balance is the challenge. But the way I look at it is, as I'm doing all of this and learning, and hopefully learning and continuing to learn, I will be more than prepared on how to make a reasonable income when I'm actually done working the 9 to 5 and obviously I'm always going to be some kind of working, whether it be YouTube or, other crap. But I'm talking to like, the comfortable salary once that's gone. Yes, patience is key. Did MSTR hit rock bottom? What a bounce. No, because look at Bitcoin. It's back in the, it came back up while we're recording this video. Oh, no, when was it this morning? It came back. What was it this morning? I don't know, but it's in the 60s again. So yeah, man, it's not, here's the 24-hour. Yeah, here it is. Look, what is this? 6:55. When did I go live? 6:30. 6:30. It was 67. Now we're at 69. Oh, you're welcome. Here, I brought some good stuff for you. But yeah, MSTR. I don't know, man. That thing had a really good day, up 26% on the Friday. Woof. But you look at the 5-day, again, still down 9%. That is one risky stock. I buy it daily, though. I'm not going to lie. I buy Bitcoin daily. I buy that daily. I buy STRC daily. I buy SATA daily. I try to buy ASST daily, but it doesn't let me. So I have to buy that randomly. I know some people probably say, like, what the hell? What the hell? Bitcoin will bottom in a zigzag pattern. I want another test of 60K or lower. 58K needs to be breached. Then 39K. Don't be talking crazy. 39K. Could you imagine? Hey, at least my cost basis would be pretty sweet. I'm thinking I need to keep 50% dry powder or in indexes while use other positions. Yep. Yeah, man. I'm an index guy going forward. You may see these individual tickers here, but they're not. They're just they're here temporarily. They got to get kicked out. They got to get kicked out. I'm not trading. I don't like SPY on the RODY. I may do SPY on the daily, the 0 DTEs with you guys. But as far as the RODY goes, I think the Qs and IWM, they have much higher IV, not much higher, but enough to make it worth it. But that's what I'm seeing. I don't know. Could be wrong. That's how I feel, at least. All right. Let's pull up an old video, play some music, and call it a day, because we're at what? Oh my God, we're at the hour. Good Lord. All right. So let's go to videos. Oh, someone said pull up a car video. So I'll pull up a car video. Let's hear it. My second video ever. 7 years ago. Why? Actually, no. Let's pick this one. Look at this. Look, I was even doing it then. Control your 401k. It's your money. 7 years ago, 100 views. Look at that. Look at that. Oh my goodness, no beard. That's when I didn't have a phone holder, and the phone had to sit in the cup holder, right? All right, so we'll keep this on. But before I hit the music, as always, this is not financial advice. I am not a financial advisor, and this video is for fun and entertainment. So hopefully you had fun. Hopefully you're entertained. If not, better luck next time, I guess. As mentioned earlier in the Discord, We're gonna start opening the voice chat. Your guys are welcome to go to the voice chat and talk amongst each other anytime. It's always been there. But Ambassador Quan and I are gonna try to keep it a little more active. He may actually do interviews. He may interview fund managers on the Discord. He may interview famous YouTubers on the Discord. He may interview me on the Discord. He may interview SB on the Discord, Black Mamba on the Discord, anybody, right? Anybody. But yeah, so no, it's time to let's get a little more personable, and actually we can get some conversations going. Sometimes it's helpful to talk through things too. All right, let's get to the music, and then think of a keyword while I'm playing the beats. All right.
Ooh. Yeah. Good morning, friends. R to the O to the D. Retire on dividends, you know me. Cash flow mindset moving differently. Numbers don't lie, plans stay ready. If you want that life, say freedom with me. R to the O to the D. Retire on dividends, you know me. Built, not sold, yeah, intentionally. No hype talk, just clarity. If you want that life, say freedom with me. Mid-40s, married man, house stay loud. Raising up boys, turning boys into men. New puppy running, chaos around. Still clocking in, but he plotting the end. Giants fan scars, yeah, he wear that pain. Smiles through the losses like part of the game. Never throw shots, never talks that mess. Yeah, builds people up, less results address. Yeah, streams every day, never missing a beat. YouTube live X when the mic get heat. Not selling dreams, just showing the math. Wins and drawdowns, full on his path. Spreadsheet brain with a streetwise frame. Plays of discipline, never chasing fame. R to the O to the D. Retire on dividends, you know me. Cash flow mindset moving differently. Numbers don't lie, plans stay ready. If you want that life, say freedom with me. Yeah. Options on screen, risk handle precise. Structures built calm, every move got a price. Cover calls roll, protection in place. Time on his side, patience setting the pace. They say slow down, he say stay exact. Same calm tone when the market snap. Runs through mud, just to test that will. Same mindset when the chart goes still. Sings on the post, crowd laugh, he grin. Go dig a hook, but the lesson still win. Movie quotes fly, wrestling frame. Serious work, but he keep it light, man. R to the O to the D. Retire on dividends, you know me. Cash flow mindset moving differently. Numbers don't lie, plans stay ready. If you want that life, say freedom with me. If you want that life, say freedom with me. This was for fun and entertainment purposes. I hope you have fun and will entertain. And if not, I'll do better next time. And if you made it this far, and you want to make sure everybody knows, you got to say the keyword. Freedom!
All right. Thank you all for watching. The keyword today, Brother AB said one before, so we'll use it. Ouch. Kind of represents my my hit on Robinhood on the RODY. But anyway, if you made it this far in the video and you want to prove it, you got to type in ouch down in the keywords after this video is posted, either on YouTube or X. Thank you for watching all, and have a great weekend. Later.